Guys, we've made it. It's the last week of August. Don't know if that's a good thing because September is usually really bearish, but I hope everyone had a great summer. Welcome back to another weekly trade plan with Will. This is going to be for the week of August 25th. Let's get started. So going forward, I think what I'm going to do is just utilize my Substack, which is the dividendjournal.org. If you're not already following, please do. It's free, so no charge to you. And it'd be a great way to support me, so I appreciate that. But in terms of red folder news, we only have two things. So it's going to be Thursday, which is prelim GDP, as well as unemployment claims. And then we finish off the week with Friday with core PCE. So not the biggest highlight for this week, but what everyone is likely going to be watching is going to be NVIDIA's earnings, which is happening Wednesday after hours. Besides that, there's a few other earnings that I'm really interested in. For example, CrowdStrike, Snowflake. These two names are really interesting because they are software. CrowdStrike actually was one of the market leaders going into this rally into summer. But as you know, software has taken quite a few hits recently. So it'll be interesting to see whether or not the reaction to their earnings will lead to a rebound or even deeper of a pullback for software names as a whole. I'm also really interested in Dell and Marvel, as these are also semiconductor names. And then Dollar General will be a good one to look at too, and to kind of gauge how consumers are behaving, especially in the lower end of income. And before we get started and looking at the market as a whole, let's take a quick look at crypto again. So this weekend, Ethereum has hit a brand new all-time high. I know that a big pullback has occurred since then, but these types of things happen, especially when there's a lot of liquidity at stake. But this could potentially be phase two. And phase two right here, as you'll see, is exactly where Ethereum starts to outperform Bitcoin. So in terms of looking at the cycle, if we're trying to follow it again, this is likely where we are at now. So going forward, what I'm really looking to see actually occur in the crypto market as a confirmation that we're trying to follow this cycle a little bit still is if large caps and altcoins start to see some momentum and big pushes in price. So that will lead us directly to phase three, which will just be the other large caps. So like Solana, Avalanche, Ripple. So take a look and keep a close eye on these names. And then of course, from there, you'll get that 3 to 4 week spurt of altcoins just going absolutely ballistic, which I anticipate to happen likely towards the end of October to November. Other than that, let's take a look at the market because a lot has happened. So this is SPY on the daily time frame. And as you can see, we actually pulled back for the whole week until Friday, which is where we had the Jackson Hole Symposium. This is where Jerome Powell gave his speech. And although he didn't say cut or September, he essentially alluded to the idea that we're likely going to get a cut soon, seeing as how September is the next FOMC meeting. That's likely where we get our first rate cut. He said that because of the risks that exist, it may lead to the Fed having to adjust their policy, which is his exact words. But this further reaffirms my idea that this is going to be a buy the rumor, sell the news type of situation in market run-up. We likely don't have that bearish of a September, especially in the beginning, until the FOMC meeting. And from there, once we get that confirmed rate cut, I expect us to have quite a bit of a deep pullback in terms of taking profit, as well as just selling the news in of itself. You're also seeing some warning signs already flash in the market because as you'll see that SPY actually hit a new all-time high on Friday and we closed near the highs, which is really great, right? We bounced off the 21 EMA on the daily, which shows you that this trend is still continuing higher. But on the other hand, when you compare it to tech, QQQ, we are actually still under this initial breakout level that had a lot of struggle. You'll see that once we made this high and had that huge rejection, we eventually did break it, but then we failed to hold it. And whereas SPY was able to close near the highs, Qs actually stayed under this initial breakout level, that recent all-time high. So this is kind of a beginning warning sign that tech is definitely a little weaker here. And we all know that tech is usually more risk on, which means that when people feel like there's more gains to be made in the stock market, they'll likely put their money into tech. Right? And because Qs are lagging the SPYs here, that tells you there's a little bit of caution and you should be careful, especially as we start to close the month of August here. Other than that, let's get started. There's going to be 6 names I'm taking a look at to try to get an entry on this week. The first is going to be Google here. So on Friday, we did have news that Apple and Google were going to work together, which is why we saw that spurt and intraday spike to new all-time highs momentarily. But what you'll see is that we actually did unfortunately close under this Friday, August 15th candle, but still relatively strong and high volume here. And if you actually look on the weekly time frame, we're just steadily climbing along and trying to break this all-time high level at 207. So obviously the entry is going to be a clean break over that level again. I'm looking for a 15-minute candle close, likely above that 207, 208 level to catch an entry. I'm looking at the 919, 210 to target that 210 mental number and then 211 from there. And because tech is lagging behind SPY, I really don't think this trade is going to be a long one where you can hold runners for too long. So I'm expecting this to be a quicker trade towards trying to hit that 210 where we might get a heavy rejection. The next name is going to be JP Morgan. Obviously, financials are pumping a little bit because of the Jackson Hole Symposium where we might get that rate cut in September. So in those hopes, financials are going to be catching some bids here because if rates get cut, small caps are able to refinance their debt as well as take on more loans. In effect, the only true benefactor, I guess you could say, are going to be the banks that are actually giving out those loans and refinancing. Similarly to Goldman Sachs here, you'll see that Goldman Sachs is close to that all-time high level as well. I really like the look on JP Morgan, and the trigger for me is going to be above this 29728 level, and that's from this 4-hour wick right here on July 31st where we had that little gap down. And on a break of this, I'm targeting the 919 300 calls. Obviously, I want to try to target that 300 first and then go for 305 and 310 for that final mental number here. But this is really good consolidation. The daily is a little bit messy because we actually did have new highs, but then it was rejected really hard. So technically, if you want to look at it, right, you can set the level to be here at around 296, which is just where JP Morgan actually closed under on Friday. And you can view this little consolidation area as a failed breakout, right? So what you really need to look at here is actually just honestly a daily close above this 296 level again, and you'll see and just see if it will actually have a continuation move from there. So really good risk to reward because you can just cut this if it closes under that 296 level here. And the next thing is going to be Docs. So Docs was on the list last week, and I actually did take a position on this on Friday from the candle here. The biggest reason why is going to be this weekly candle. So not only we had that earnings candle where we had a lot of momentum. We had an inside week, and then during the week it was kind of like flagging and inside, and sometimes it was actually closing red on the weekly candle. But on Friday we managed to close and break above this range. So we're just at the 67 level, which was from this pivot at March 21st, around 67.75. That's exactly where we closed, but it's a bullish hammer, and that's just very bullish to me. The other thing is this. We had a kind of a nice earnings peg here. So power earnings gap, right? Like we gapped up and we defended it. Even though we tried to break past this low to fully gap fill, the price never did that, right? And then on Friday, we pushed past price with a lot of momentum and a lot of volume. And when you look at the monthly here, you're seeing that there's this trend line, super high time frame range trend line that it's pressing up against. So this name has a lot of potential to catch some bids here, especially as you'll see that IWM, which are going to be the small caps, are actually reaching and trying to hit new all-time highs here, whereas it's up 4% on Friday, whereas SPY was only up 1.5. I think for a fresh entry, I'd be looking at the September 19th 70 calls. And honestly, I just want to see a consolidation for maybe like 1 day, print an inside day just under the 67 level, and then that's the entry. Once we break that, I want to target 70 as the mental number, trail it, and try to target the 75 as the ultimate price target. And following the same theme of small caps and financing, the next name is going to be Rocket Companies. So this is going to be finance, leasing, rentals. It's another really nice trend line resistance that it's pressing up against. This is on the weekly time frame, just really, really beautiful, right? Because we had an earnings play here where we gapped up and held a lot of momentum, but then every single candle here has been declining volume. And then this most recent week is an inside week. EMAs are curling, weekly is curling, and we're just shy of this inside day break here. So for an entry on Rocket, I want to see a break past this 19.67 level to take the September 19th, take the 20 call. I want to target at least 20 to 21 here, which is going to be this near recent all-time highs. And then from there, honestly, the sky's the limit. Can squeeze. We can just try targeting this pivot all the way back from June of 2021 at around 22, 22.5. And these smaller names always kind of iffy because that's only like a $3 move, right? But when you look at the percentage, that's a 17% move. So really big moves are possible in this name. We just need to see this inside week break and actually have momentum and carry over to actually hit these targets. And the next name is going to be Bull here. Bull was on the list last week too, and we actually had a failed breakout. I will admittedly, I did take this trigger, but then because we failed to hold it, I ended up having to take a loss on it. So if we go down to the super low time frames, I'm on the 15, we'll see that we did break it. That was actually my entry. But because we failed to have a 15-minute close above the 16.34 level, shows you not only is it a big important level and a pivot that price is going to struggle with for a while, but also once we actually get a 15-minute break close above this, it's likely going to be a confirmation of an actual breakout. So when that breakout does happen, it's likely going to be fast and aggressive. So you have to be sure when you're executing on this type of trade. But it looks really good because not only did we bounce once again on the 0.618 here, it bounced with a lot of volume too, and we're just shy on this trend line again. But unfortunately for me, I think what I would want to do is I want to see a break of this trend line as the starter entry. And then once we get a candle close or even a 15-minute candle close intraday above the 16.34 is likely where I'm going to add full size on this. And then the first targets are going to be the 18.32 pivot, which is at this high of July 24th. And then I want to target 20 as the final price target for bull. And lastly is going to be Tesla, but I'm going to be very cautious and I'm going to caution you as well, because not only is every retail trader on Tesla, when this happens, it usually does not bode well. If everyone's looking at it, it's likely that it's going to fail. But the other thing is this. For September and October, historically, Tesla has actually underperformed in these months. So I'm going to be very cautious on this one. That's why I don't even have a contract name on here. But if Tesla does actually start to break out, the only way I could see an entry is a break past the previous week's high, which is going to be around 348, 349. And so I would want to see a break past that level and then a daily close above this to actually be confident that this breakout is likely trying to happen, because it's really messy, right? Like we've tried breaking it once, twice here, but then we just rejected really aggressively. And the risk to reward, in my opinion, just isn't that high, because even if you do take this entry at 349, you likely have to take that first trim at 357. And given how, assuming you're trading options, that's only a 2% move, and the theta is really high. Not only that, but the premiums are expensive for Tesla too. So it might not be the best risk to reward ratio for this trade. As always, thank you guys for reviewing my trade plan with me for this upcoming week. Trade responsibly, and I will catch you guys next week.